So this is my setup, and he played out beautifully. So how do I come about this one? So let's get started. The same simple principles, right? Market structure. Need to, after top-down analysis, it begins to look for structure breaks or structural breaks in respect to the higher time frame momentum. And also you need to consider, like I said, you need to consider how aggressive is the market before this break of structure. Look at it. Look at the aggressive. Let me remove this one. Okay, we'll get back to this. So now let's start from the monthly time frame. What did I see? So from the monthly time frame, bro, look at the monthly candles. I don't want to say too much. Look at the monthly candle. From this point here, it's an uptrend, right? Market structure wise, this is what? Impulse, the whole of this correction, impulse, another correction, then impulse. But then after maybe you identify your market structure, is it H4, is it in consolidation, or is giving you a kind of a market structure for a buy, market structure for a sell? So after that, what you need to also pay attention is the last month candle and the current candle on the monthly time frame. We know market structure wise it's an uptrend, right? Now look at the last month. Last month candle closed as a bullish engulfing. What does that tell you? Tells you how buyers controls last month and sellers is taking over. So what happened here in this current month? Look at it. The current month give a little retracement to this point, and then we started seeing rejection, momentum pushing down. This rejection is a momentum telling you that the higher time frame momentum is bullish. So this bullish momentum, look at how strong it is. Then who are you to sell on the lower time frames? It doesn't mean you are going to be seeing lower time frames and you are going to be, when you enter some synthetic, that is why you go on Twitter. They always give bad names on this market because some people try to use their smart money stuff in there on the lower time frame. It's not working. Like I was one day on the X and Twitter, I saw how a lot of more than hundreds of comments, how synthetic indices does not respect market structure, very rubbish market, how synthetic indices is this, that pair, this, and only few persons who like, this thing is working. Maybe you need to learn this one, you need to learn this one. So even when you are complaining, there are gurus. My mentor is a guru. We have one guru from Nigeria, Lucky Men or Wolf Self. He's a guru in synthetic indices. He cannot have that consistency in currency pair the way he's having that consistency in synthetic. It's just, synthetic is pure knowledge. You don't need to, fundamentals. Once you have the knowledge, you practice and master yourself with the knowledge. Finish. So this monthly candle that is pushing, the momentum of monthly is bullish. Then the question now is, who are you to sell? Are you a son of a millionaire? Like I said, it's not as if you go to the lower time frame, you'll be seen selling, small sell. And you go to some Telegram, sell volatility 50, buy volatility 50, sell volatility 50. They don't even know where they are going. So you need to pay attention to higher time frame momentum after market structure. Look at it. A rejection started from here, pushing. That means momentum is bullish. In that case, you should become what? A buyer. So in this wise, now that the momentum is high here, what are we going to be doing on the lower time frame, H4, looking for structure? It doesn't mean you are not going to be seeing retracement. So structure breaks, aggressive move that break a structure, candle that is responsible for that break of structure, I already know. I'm not, when market comes to my buying territory or the buying neighborhood, I'm not contemplating. I'm only looking for entry confirmation to sell because the higher time for momentum is bullish. There is no way this guy would now disrespect this buying neighborhood and start going down. Except your top-down analysis, you are missing something, right? So now, this guy is bullish. Let's go to the weekly. Weekly is also for the past how many weeks now? The market buyers have been in control. Another question is, who do you think you are? Are you a son of a millionaire? Who is your father? To put your small $10 for a sell and you think the market is going to sell based on your own emotions. The momentum is bullish. Follow the higher time frame momentum, right? So now you come here, it's still an uptrend, right? So now this candle, buy for the past 3 weeks, buy. So what are you going to do? You know that buyers are in control. So what are we going to do? Now that we know the higher time frame momentum, which is what? The monthly and the weekly. So I'm going to highlight this point here. This point, if we go to the smaller time frame, what are we going to be seeing? What do you want to see? For us to follow the higher time frame momentum, we want to see this market structure so that we can be waiting for market to come at the low, we buy. Coming at the low is going to give us a best discount price as buyers. So what we do in synthetic indices, we are fighting for a competitive price, right? So this is this structure. Sometimes the market, if the higher time frame is the momentum is too strong, it's not going to be providing this, it's not going to be easily come back to this zone, but you need to wait. Like I said, your strategy is not going to be, market is not just going to be anytime you determine a zone, market will come there, you buy, it's not easy, right? So patience is what is going to help you. So what is, you mark your zone, market failed to come there, keep going. You are waiting for them to create another zone. They create another high. Okay, you update. And then finally, they come to this one. You say, oh, thank God. The momentum is still bullish. Confirmation, beyond. You can hold. With this knowledge of a higher time frame market structure and higher time frame momentum, you can hold your trade. But of course, it involves a lot of emotions, right? You can say, fine, I'm in here. Even before on the H4, when synthetic move like 1 hour, that is crazy money. So now this is the structure we are going to be looking. Let's go to daily. From this point here, what do we see? On daily, from here, it has not been so clear from here. But before we get to this point here, let's look at it on, let's look at from this point where daily started moving. I remember from when daily started moving, also, they start from here. There's a break of structure here, right? So when market moves here, fail to break, retrace, and then finally aggressive move that finally take out the structure. So where was the source candle? The source candle was this. Based on market structure and top-down analysis, the source candle was still this one that the market tap in, right? So this is how you would have joined this one if you know higher time frame momentum. But let's deal with the current one here. This one here, before this one that market play out, this current one, before this market gets here, what are you going to be doing with this momentum now? On daily, it's not clear. We go to the H4. On H4, it's a bit clear. So what are we going to do there on H4? On H4, we were able to, we have this one here. We have, which one here? This one, did the market activate? Yeah. There was a break, you see. The momentum is bullish. So what you do, break of structure. The source candle before the aggressive move that break its structure, market comes. There was a break of structure here, guy. There was a break of structure here. Because the momentum is high, so something happened here. Do you see? You wait for market to come, entry confirmation. Understand the higher time frame, momentum, right? So now let's deal with the current setup. This setup played out yesterday. I've been watching market was it 2 days ago? Yes, it was yesterday that I think, did I save that one? It's like I saved it on, let's see. Because I'm even paying more attention within this week that gold is giving me headache. So gold is not moving as we want, just up, down, up, down. So like, okay, let me just use this time, focus on synthetic indices, right? This is where I started my journey. So, and when I came to the chart, I began to see a lot of opportunities. I say, so why not you just divide at least 30% of your time and give synthetic? After all, synthetic indices is the strategy I use is if a market set up, maybe it's next day that market is going to get there. So it's not something that I have to be waiting for. Oh, if I miss London session, I miss New York, I'm not going to trade in SL session. This one does not move by session. So anytime market comes there, you can actually trade, right? So now the market keep moving. Let me keep moving. What you are going to be continue to do, if you find an entry somewhere here, you can swing. Why? Higher time frame is bullish. Higher time frame momentum is bullish. So if you want to drive with the higher time frame momentum, you can hold. And then since then the market started consolidating here. So my first setup was here. Okay, I see this aggressive move. Also, this one here, but I feel like maybe since they are creating a low here, they want to create liquidity, then they will now drive down and then move. But the market could not even answer me. And then the market break aggressively again. Let me remove this one so that we can see how impulsive. You need to pay attention to the supply and demand. See, markets was here for 1 day, 1 to 2 days, consolidating. All of a sudden, something moved the market aggressively. What is that thing that can move this market aggressively, if not bias? So if you see aggression like that is responsible for a break of structure, what do you think if the market comes there, it will do? It means that this is where the buying neighborhood is. You as a buyer, your job is to identify the selling neighborhood or identify the buying neighborhood in the chart and wait for market to come there, because where you are attacking the market, you are not alone. Your neighbors are there. When you want to sell the market, you are not alone. So when you come to the market, do not just be in a haste to buy. You are not the only buyer. Always remember that. You are not the only seller. Ask yourself, where is the market going? Where is the momentum going? From the higher time frame, okay, you see momentum, top-down analysis. Okay, you come to the time frame you want to determine your key point of interest, which is the H4. You now ask yourself, now that the higher time frame is showing me a bullish direction, higher time frame momentum is bullish, now I want to become a buyer. Ask yourself, where are other buyers in the market? Based on supply and demand, you can easily specify where other buyers are waiting. So for me, for you that you will be going to the lower time frame to want to buy here, you are on your own, because they are not, it is only you that want to buy here. Where are your buyers? Where are other buyers who are also interested in volatility 50? Are you the only person that want to buy? No. So I can easily say, okay, the people that move this market aggressively, where are they from? They are coming from this source candle here. So if we also need to assess the daily, right? The daily time frame. We can always refine our this thing. So from the daily here, it's also very obvious. From the daily, after market moving, drop, aggression. Aggressive move, break structure, and then market is coming back after this aggressive move. What do you think the market will do? Based on market structure, based on momentum on the higher time frame, we can say, okay, fine. The market is going to come to this source candle. that are responsible. But when you come back to the daily H4 time frame, you can as well reduce your zone maybe to this one here. I just marked the whole of this here. So now when the market got here, what happened? The moment the market dropped here, the market started losing strength. Seller started losing strength because of what? The buying neighborhood, the buying territory. So when the sellers enter here, there was not that movement because it's going to be a fight between supply and demand, right? So the buying neighborhood, they were the one that pushed this market aggressively up. It shows that there are a lot of buyers here waiting. And then sellers took over and started coming. So when the only possible area that the sellers can be easily defeated is here and not here. If you go to the lower time, you'll be seeing a lot of reasons to buy, right? So, but you know, because you can be able to detect the selling neighborhood and the buying neighborhood where you want to join and partake, you know that is here. So the moment they were coming, look at how they were coming. They started smelling the danger zone here. And then all of a sudden they enter. The moment they enter, what? Buyers take over. This is where you start looking for entries. So what was our entry? You go to the lower time frame because this zone is connected to the daily and also connected to the H4. So I'm not just going to sit comfortable from M15 for entering. I also want to observe from H1, M30 to see. So we go to H1 time frame. What did I see? From M30, let's go to M30. So I see this aggressive move here. When market comes here, like I said, the first aggression is fake. We'll talk about entering maybe after. We'll talk about entry in another session, not today. Not today, because I think we have done a lot today, right? So the first important thing you need to know is to do top-down analysis. If you don't know how to determine your selling neighborhood and your buying neighborhood or your key point of interest, whatever you want to call it, therefore entering is going to also be a problem because you can't be attacking to sell or to buy in a wrong zone, right? So that is why this first session, top-down analysis with the knowledge of market structure, we have been preaching in all market. Once you know how to do that, once you know how to spot momentum from the higher time frame, that is why I say one candle, this is not currency pair, one candle on the monthly that is showing a bullish movement can affect you if you don't pay attention to that monthly candle. That is why I cannot be trading without knowing what the monthly is doing, without knowing what the weekly is doing, right? So what did I see? The first aggression that got into the zone, what happened? You see this aggressive move. The aggressive move was moving without any reasons to buy. There was no confirmation. There are many entry techniques that we use to get in, right? So someone now, you just come here and then you see this aggression. Maybe you come on the chart and say, okay, let me join. That is not the normal move, guys. So, but I see that this aggression break a structure here. So that aggression that break a structure, for me, I was looking at this candle here, but this candle is too close. Then I was looking at this one here. Who are these guys that are responsible? If you attack this one, fine. If you attack this one, also let's say you consider that one here, the first one here. You consider the first one here and you attack. Your TP can be here. Your TP can be below, right? Maybe you have been safe all the time. But then I see a lot of strength from this other block here. So this was the markup. Did I save it? It was the markup here. So that day, yes, the day before yesterday, my entry was here. My SL was below. So the push in profit, they went back. The push, they were playing around. I went back to observe the momentum from the higher time frame. I went back to see my analysis and I say, okay, fine, I want to hold this trade. If they move, I do not want to hold for a swing. If they move, they will definitely put me in profit. There's no way this market will just disrespect this zone. And then one beautiful morning, this yesterday evening, I saw aggressive move. A buyers finally take over and started pushing up. This is how to do top-down analysis. But we are going to talk, I'm going to review more of the different ways you can use as entry confirmation to attack the market, because top-down analysis is not hard in synthetic indices. Entry is where the problem lies. Entries, 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 entries. So right now, if it's okay, the market is going, break structure, you enter here, they come back. Maybe you put your stop, they take you out. Okay, you see they are going now, they come back, they take you out. So before you know, it's not as if you are wrong. You started playing around with your small losses. And then sometimes if you have to put enter your trade, put your SL below, where you are in a territory where you have a lot of buyers that are going to defend you. You have a neighborhood that are going to help you to fight. You are not alone in this zone. So you should not be afraid like that. You are always not alone. If I show you a scenario where the zone, where maybe market coming to a zone and finally defeat that zone, is not, you are always going to be in profit before anything that can happen, because definitely that zone is strong enough that will push the buyers up before they will now come back and to push the seller up in profit, before they will now, at that time you're already in break even, before they can now finally break. So it's not always easy that market comes to that zone and you will not be safe. You are going to be safe, but the problem is, now that the market is in the zone, when are you going to press the sell button? Because for this guy to come here and they start buying, they have to play around with liquidity. They have to play around with people's emotions here. This is where I traded this particular market for like one and a half year. I did not withdraw even 10 naira. The money I made from the market when I start that time, I made money when I don't even know there's people lose money in trading. So when I started trading boom and crash. So I make $50, I make $20, but I don't know that people lose. So I don't know losses. So my psychology was intact. I'm not afraid to enter a trade. So the moment I go deep into trading and I started experiencing losses, so now a new mindset formed, that mindset of fear. So whenever market comes here, I enter, they are going, in profit. They are coming and putting me in small losses. I close. Boy. They are going again, I enter. I've known losses in such a way that I don't want to see red candles. We even try to change this red candle to blues, because anything red represents loss or losses. To some extent that I hate red candles. So we want to change the red candle to blue or to white so that your mind will be settled. But if you like, change it to any other color. If you are wrong, you are wrong. So that was the mindset. So they come here, they are going again and attack. They are coming, they put me in small losses, are close. But I don't have an idea that this zone here is my territory, is my community, is my country. Definitely, they are going to defend me. People are going to defend me. This is my street where even police cannot arrest me here. So I'm only playing around. So the moment that is why you see, it is very important that when you find a zone like this, your buying territory, the moment market move away, from the buying territory or market move away from your zone, the more it becomes risky to enter. So that is why in synthetic, you don't just enter on the road because you see market leaving you. Learn to attack from your zone, because the more market move far away from your zone, the more it becomes dangerous for you to enter. Imagine market has leave your territory to this point. This is where you want to come and look for trouble, where your guys are no more here. They definitely are going to beat you up, right? So learn to attack here. because this is your territory. This is what we do here in synthetic indices. So I believe you guys learn one or two in this top-down analysis, market structure-wise. So tomorrow, if I have the time, we're going to do purely now I'm tired, guys. So we're going to talk about only entries, only entries, only entries, only entries, only entries, 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 entries is evil in synthetic indices. Entries, entries. You see market eating your money before started going into in your direction. You see that your analysis is right, but market always eats your money. Entry is evil. I suffer. Entries, entries, entries. It was this same reason I now started looking for means to learn currency pairs. I never believed on currency pairs before. I love synthetic indices. But when the market begins to target me, I was believing that why is it that whenever I lost everything, that is when the market will start moving in my favor. It's like it is something like village people, something spiritual or whatever. These people are. So by the time you lose money, you go to YouTube, you see one frustrated synthetic indices trader with the wrong mindset. Oh, synthetic indices, what they do is that they will now check the number of sellers and the number of buyers that are into the market. If they know that buyers are enough in the market, they will now favor sellers. Oh, you now believe. No wonder they are taking my money. It's the same thing in currency pair. People are heartbroken. And that is why when you struggle in Forex and struggle and struggle, and you can't really detect. Sometimes it's not your strategy. Sometimes it's your own person. You can't really figure out what is your problem. You now come and stand on social media, because social media is a platform where people express their frustration. You can post something and nobody, even when they don't know you, somebody will just come and abuse you. And you will see the statement as if you guys have been living together for long. He doesn't know you. So it's a platform where people come, they have to, people always put data to be looking for problems so that they will give wrong comment or they will express their frustration on that under the comment section. This is what people do. So when they try this thing and they fail, they will come and be discouraging others. You see them after struggling now. Are you sure Geoffrey Benson is making money from Forex? Those guys are making money. They are influencers. They are making money from their signal. From signals. They are not collecting money from their courses. Their courses. That is why they were saying to Kojo, he started struggling from indicators like this. He was there doing it, trying to master himself, trying to do, oh, yeah, Kojo is this. He's living in Dubai. If he sell courses to live in Dubai, go and sell the same course and go to Dubai. People are frustrated everywhere. I don't want to belong in any group that will criticize synthetic indices. If you are failing, I know that it's knowledge you lack. I don't want to belong to any group that is criticizing Forex. If you don't believe in it, it's not for everybody, right? It's not for everybody. So you leave it instead of you discourage others. Once you have a platform on social media, you need to be very careful because a lot of people are following you. You can lead them astray. You need to be, once you're on a social media, you need to be a role model, right? So you need to work on yourself. Sometimes my problem is I was with my mentor since I knew him 2021 till date. Every week he's printing money on synthetic indices. He never believed in currency pair even one day. He has never traded currency pair even one day. He's very successful in this market. Even when he was even sending me setup on his own, my own is to enter. I was losing money. I now realized that it was now. At that time, I was like, I lost money. Why did I pay for this mentorship? But later I realized that, oh, I learned a lot from this South Africa guy. I learned a lot. The problem was coming from me. My fears, my psychology was messed up. Now, I was also having problem in top-down analysis. Imagine there was a day I was analyzing step index. In my mind, I look at step index from the daily, okay, the step index, okay, is going to buy. If you look at that step index, higher time frame momentum monthly, bearish, with a very big bearish candle. coming down impulsively. Weekly, bearish. Even that daily, bearish. So what I know, the small retracement that was going on from H4 was that retracement. Also, I was connecting my indicators. Was that movement that convinced me, okay, yes, I'm right, it's going to buy. So I entered that trade around 8 o'clock in the evening. Okay, 8 to 9. I was frustrated. I was frustrated, 2021. So when I found my account with $10, I mean $20. So I entered the trade, two position. I now kneel down because I wanted to sleep. I kneel down and hand over the trade to God because I was believing that God is seeing my frustration. So God, this is how I've entered the market. Please help this trade to go in my favor. I prayed that very night. I prayed and I slept. Throughout the night, I was dreaming about my trade. In that dream, I'm winning the trade massively. But my dream is always opposite. When I woke up in the morning, realizing that, oh, that winning trade is a dream, or was a dream. I know that I don't lose that trade. The market press my small $20 press me down and started shooting down. Like since that night, it's like the market retraced about 1 hour, or it's not even up to 1 hour, 30 minutes, and the market started shooting down. Higher time for momentum want to finish me. So it was later I realized that for me to see bearish engulfing on monthly, bearish engulfing on weekly, everything is aligning to the bearish movement. How on earth I was thinking God, I was expecting God to reverse the market in my favor. There's no way. So most time when we are failing, if you look around, it's not even your strategy, yourself. You need to give yourself time. Don't just rush into conclusion. Even currently, last week, I saw one guy with a very good microphone, with a very good camera, and he was doing a content. Oh, he laughed, kia. People who are trading synthetic indices, they thought they are trading Forex. He started explaining how synthetic indices is, how synthetic say this one don't lose money tire. You need knowledge. You are not in a position to those ones, they can only deceive beginners trader who just start their journey. You are not, if before you can convince me or discourage me in any field in my life, anything I want to do, before you can convince me, it's going to be hard, especially when I've done my research and I see that I've seen a lot of people doing it. I see women doing it. I see men doing it. Then who are you to come and convince me? This is me. I'm a researcher myself. So guys, work on yourself. Even currency pair is not easy. How can we see a very clear Quasimodo and then market just come with one news, took everybody out, and you say synthetic is full of manipulation. So since synthetic is full of manipulation, how much money have you made in currency pairs, which is the chief of manipulation, in my opinion? So every market is full of manipulation. That is why we learn strategy. Strategy means we are developing means to be able to attack the market and come out successfully. So if currency pair, no manipulation, oh, it's going up, you enter why? Because they say a trend is your friend. After a trend is my guy, and it's going up, you enter why? You no go up, you go come back, clear you, then continue going up, right? So that is why even if you say a trend is your friend, you have to follow the trend, who is that trend that is your friend. You need to follow that trend with the tactics. That tactics is what we call strategy. That tactic is what becomes your strategy. Now that the trend is bullish, okay, I'm going to wait for market to come to this one. Okay, this one will say, okay, I'm putting a trend line here. This one will say, okay, I want to connect this one. Are all what tactics, which we call strategy, for us to follow the trend. Because this market is wicked. No market is designed to make us rich. That is why we sometimes we paid money. Sometimes even when we paid those money, we'll be still struggling. We need to read. We need to study. We need to work as if we did not pay for the course. But paying money alone cannot make you a profitable trader. You have to pay, you have to work, you have to act according to what your mentor have trained you. And sometimes you have to give yourself time for you to be able, the application of the knowledge that you have been taught after payment is not easy. Knowledge, everybody knows. Even before I came into Forex market, I know how to define order block. Oh, what is order block? Oh, they say institutional, where the institution place their order. What is market structure? Market structure, three types of market structure, uptrend, downtrend, consolidation. Are you profitable? It's not about knowing their definition. Forex is not theory, Forex is practical. That is why you need to practice, 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 and become what you want to become. Thank you guys for this session. I'm going to do entry session tomorrow. If I have time, I'll let you guys know. Thank you. Keep working. Catch you in the next one, guys.